warmth of your skin. I feel the touch of your hand.
Hey guys, Omar here, mic check, mic check. Hey guys, Omar here, broker and CEO of Alden Mortgage and Omar Realty. So there's always going to be a big dilemma, and you'll probably be one of them if you're actually in the process of purchasing a house, if you're in the process of refinancing, if you need a home equity line of credit, whatever it may be. So what do? Do I go with a broker? Do I go with a bank? Do I go with a credit union? Well, I'm going to break some of those down for you right now to kind of give you an idea which is better. Obviously, I am a mortgage broker. I actually own that company right there, and I think I'm the best. I really like my job. I really love being a mortgage broker, and I am pretty quick with a lot of things. So as anybody, if you're a mortgage broker, you obviously will think that you are the best. But for this video, I'm going to try to stay completely unbiased. I am not going to go ahead and have any favoritism towards me. So let's go ahead and break down exactly the first part of it. So who do you shop for, right? The first one you're going to go ahead and shop for is going to be your credit union. Now, a credit union, credit unions are great. Every single one of these, whether it's a credit union, whether it's a bank, or whether it's a broker, they're all going to be really good. Every single person is going to have, for the most part, I would honestly hope that they would have your best interests in front of them. But credit unions are great because, well, let's face credit unions, they're owned by the depositors, right? The people who put their money into it. So each credit union is for nonprofit, so they get some really good rates. Everything is super cheap. The number two is going to be your bank, whether it's a JP Morgan Chase, whether it's a Wells Fargo, whether it's a Bank of America. You get to go ahead and choose whichever one that you want. And then lastly is going to be the broker. A broker, like myself included, you could go ahead and look it up anywhere that you want. You could go to findabroker.com. You could go to whoever you feel more comfortable with. You could Google search brokers. You could find quite a few of them. Now, what are the few things that you should know between all of these? Now, you could shop around with all three of us. You could shop with myself, a broker. You could shop with a credit union, and you could shop with a bank. And a big misconception is like, okay, so if I go shop with them, every one of them is going to ask to pull my credit. They're going to go ahead and ask they keep asking me for the same information over and over again. If you are with me, and I'll be more than happy to do this for you. If you want to, you could go, link in the description below. My website is down there. You could actually just go ahead and pull the application in there. And then if you want to shop around with anybody, there's something that's called the 3-4 file that goes ahead and pre-populates every single one of the 10 threes. If you give me the consent to it, I'll go ahead and send it on over to whatever credit union that you want or bank, so they have the file. So it's a quick little plug and play if their program is able to go ahead and utilize that. But you're going to say, hey, they're going to want to pull my credit. Well, don't worry about the credit pull, okay? So from the moment you start shopping, the moment you go ahead and decide, okay, we're going to go ahead and go down this path of shopping for a house, which is a big step. It's scary, right? You want to make sure that you're not getting hosed in any single way, which for the most part, let's just be honest, after 2008, you can't do that anymore. We all have these very stringent guidelines that we all have to go ahead and abide by, and we're all in the same exact way, unless you get to what's called a non-qualified mortgage program, which we'll get into it in another video. But from the moment that you go ahead and get your credit pulled from the first person, you are only going to get dinged between, let's just say, 3 to 6 points, okay? And that's it. So you could go get your credit pulled by 10 banks, 10 credit unions, 10 mortgage brokers, and it won't make a big difference at all within a 45-day window span. Nothing will happen to your credit. You're not going to keep getting dinged at that 3 to 6 points. It's not going to make a difference. So don't worry about that part of it. So whenever you go ahead and shop all of these people around, you're going to go ahead and look at something that's called the origination charges, which is in your line number A. Okay, line number A. Does this really matter? No, it does not matter. Okay, so for the rate itself, you could go ahead and get something, a flat rate, and this is going to be what we typically sell to wholesalers on the broker side of it, or if you're at a big bank, this is what their current rate is. And what you would go ahead and do is we could switch from what's called a lender paid program to a borrower paid program. That's why I'm telling you that this doesn't mean much of anything. So what we do is we go ahead and sell off that mortgage at that rate. And then whatever our compensation is, the lender will go ahead and pay us for that compensation. But if I want to go ahead and compete with somebody and we're trying to go ahead and adjust fees or adjust charges or adjust anything that we own, especially on the origination parts, because that's where we come into, on the origination charges, if we choose to go ahead and try to compete with whoever we're trying to compete with, we would need something that would be called a locked loan estimate. That means that somebody else has locked this rate for you, and now we have to try to see if we could go ahead and compete against what they're offering. So what we would do is we would go ahead and switch that over from a lender paid to a borrower paid. Now you're like, why? I'm not going to pay for this. No, that's not how it works. The wholesalers already have a parameter of what they're willing to sell. We have our parameters of what we are going to be charging to originate these loans. If I want to go ahead and take a hit on the origination charges, if I choose to, then I could go ahead and switch that to borrower paid and then lower my commission, and then I will go ahead and still, so like let's say for instance you're at 3.5%, right? At 3.5% with no origination fees. Now underwriting fees are a little bit different. Underwriting fees, you can't change those. You can waive underwriting fees, but you're going to get hit on the APR of it, which is another video. I'll go ahead and link the description below. There is, I don't know if I did the video, but there is a difference between rate and an APR. APR is what you're actually paying for the loan rate, for the loan, and the rate is what your face value. So whenever you waive underwriting, which is not always a great thing to do, but if you do waive underwriting, it does have to get pre-calculated into your APR, which you will eventually keep paying it. So for the sake of this argument, we're just going to go ahead and let you know that don't waive the underwriting fee. It's just, it doesn't make sense. It actually costs you more if you waive the underwriting fee. There are times where we will have no underwriting fees at all. Those are very rare, especially right now. We're in 2022. It's just whatever. But so whenever you present, like let's say for instance you come to me, you're like, hey Omar, Bank of America is, just for scenario, right? Bank of America or Chase or Wells Fargo or this credit union, whoever it is, you're like, hey, can you beat this rate? I might have to go ahead and change and swap my lender paid commission to go ahead and switch it over to the borrower paid commission, because I know at 3.5%, hypothetically, right, at $500,000 loan amount, my commission would be, I don't know, let's just say $11,000, hypothetically, right? $11,000. If I want to go ahead and beat their rate, I could switch it on over to a borrower paid, because at 3.5% lender paid commission, we are at $0 owed. There'll be no money coming from you. There's no points being charged, nothing. This is going to be an even money. But if let's say JP Morgan Chase comes in at 3.25 and I would have to drop my commission to like, let's say $4,000, then I could go ahead and try to compete, go to borrower paid, which and ultimately it will end up being the same exact dollar amount, because I am not taking that $11,000 that I would typically get from the lender. I would go ahead and switch it on to the borrower. Then those credits would go ahead and go into your total value. I hope that kind of explained things a little bit for you. Then we're gonna go ahead. So we already got who we shop for, how to shop, and then let's see. And then we are understanding the fees. Now the fees on it, I will go ahead and post a video somewhere up here, understanding of closing costs. I just put something that I recently did, a loan that we went ahead and closed on. So, and I kind of gave somewhat of a breakdown of the closing costs. And this is on a closing dog, from the difference between a loan estimate and a difference between the closing costs, the final closing costs, and how close that you should probably be. Typically, you should theoretically be between, let's say, $500 and $1,000 from your estimate to your actual. That's the variance that you should be typically. If it's anything more than that, then I don't know what the hell the lender is doing, and they need to go get retrained on it. But let's go ahead and see. Now that we finally got the whole underwriting part of it, okay. Underwriting is going to typically cost between $900 and $1,200 depending on the lender, what loan program we're going to. Then you have your appraisal fees, which typically, okay, so typically appraisal fees run between $500 and $600. Typically that they do. Some might even be less at $300, but you know, I'm just going by the last couple of years. Appraisals have lost their mind. I'm not going to lie to you. Appraisers have lost their damn mind. They haven't lost their mind. There's been so many refinances and so many purchases and so many people that are trying to do something with their financials when it comes to their home mortgages, that the appraisals have been really overextending themselves and overworked so much that they sometimes ask for an exorbitant amount of money, like a really crazy amount of money. I think the biggest appraisal that fee that we got, and we had no choice, because this is another part. An appraisal is one thing in the loan process that is completely out of our control. Appraisals are only subject to what we send out to an AMC. An AMC is a panel of where it gets sent out to an appraisal company, and then the appraisal company will go ahead and assign it. We as brokers, lenders, whoever we are, nobody is allowed to talk to the appraisal anymore. You get to be there if you want to during the appraisal, but you can't. I mean, it's just, we can't do anything to kind of like finagle the whole entire appraisal process. So the biggest problem in the lending process currently is going to be probably the appraisal on a purchase. Hopefully we can get that appraisal waived for you so we don't have to worry about that. And then if that's the case, then we go ahead and go on to our other sign, which is going to be, what should you look out for? Okay. Now I'm going to go ahead and talk about myself and representing as a broker. My response time with any single loan out there, I don't care how busy I am. I don't care who's originating that loan. If it's one of my loan originators that are doing it, if it's myself that I'm doing it for you, if I'm on the real estate transaction side, I don't care who you are. I will respond within probably at max an hour. An hour is the max that you will ever wait for me to go ahead and respond. Unless it's really super late at night, and then I probably will not respond until the following morning. But I'm usually a light sleeper, so I will respond to you whenever you like. But what should be the typical? Typical would be if their response time, and these are questions that you're going to want to ask, like what's your response time? What should I expect? Response times typically should be no more than 24 hours. But if you, in the world that we live in, if you are not getting a response within like, let's say an hour max, then I mean, either you had a big bender in the middle of the afternoon and you're drunk and you just passed out somewhere, which I guess that happens sometimes, or you're taking an extended long nap, but you should have somebody to go ahead and respond to whatever you're asked. An hour is not going to kill anybody, especially when you're on the broker side, where we are always the most responsive. By we, I mean I am the most responsive. I can't generalize and tell everybody, but you should be extremely responsive to whoever you are, because let's just face it, I don't want to, as a broker, I don't want to be only your next transaction, right? I don't look at, you as only going to be like, I'm going to do your refinance and it's a wham bam thank you ma'am type of thing. I want to be able to be your guy that you would ask for a refinance if you want to purchase another home, if you want to sell, your kids, your family. I want to be able to help every single person in your house, family, friends, whoever it is, and I want you to have such a good experience with me to make you want to use me for the rest of your life, the whole entire family. That's a relationship that a broker should typically have. Banks should have the same way. Credit unions should have the same way, and that's my philosophy on that. So you want to go ahead and ask for their response time. Be really careful about people quoting rates now. Given, yes, I am guilty of just quoting rates, but that's only when people are just like, you know what, I don't want to do an application, I don't want to do anything, just what's the going rate? Well, that's fine. You want to go ahead and know the going rate? I'll give you the going rate for somebody who has, a 780 to 800 credit score, makes really well, does really well. Debt to income is really, on the threshold of being under. I'm going to give you the quote on an extremely qualified buyer. Could this change? Yeah, of course it could change. You don't want to just give out a rate, which a lot of online people do. Online people are going to be one of those ones, which I forgot to go ahead and put that one in my shopping, who to shop for. You can shop with a lot of the online people, which is fine, not a big deal. they will probably have a really, really low rate, which is fine. They could have a really, really low rate, but a lot of, and you don't have to listen to me on this. You could go talk to your local real estate agent and local broker. Anybody that is in the real estate business will go ahead and they will double down on what I'm saying, is that they have frustrations with them because it always becomes extremely difficult to close with every single one of them. Now, what do you mean by a close? Because they're not responsive. They have so many tiers of people that they have to go through. Processing team is over this way, and then you have your closing team, which is over this way, and then you have your underwriting team, which they're this way, and then the people who are actually on the side of originating loans, they're just getting calls. They're just burning and turning. They're not trying to go ahead and give the detailed attention to every single one of these loans. Could some of them? Yes, but in my experience, my personal experience, I've stolen so many, not stolen, but I have taken so many online retail or online lenders business away from them because they are not like we are as brokers. There are great ones on banks too. There's great people in credit unions that are very responsive, because you have to be responsive. Be careful about the quoting the rate, because it might look really, really enticing, but you want to get the full spectrum of everything. So have a full application submitted, and then this way you could get adjusted exactly where you're at on each and every single application, right? You want to know exactly where you're at, where your debt to income is, what your loan to value is going to potentially be at, what loan product that we're going to go ahead and get into. Then the last thing is going to be just who do you feel most comfortable with? Maybe you're one of those people who like to just feel really comfortable with your bank. That's awesome. Yeah, of course. You want to go with your bank, go with your bank. You feel most comfortable with your credit union? Absolutely, go with your credit union. Go with whoever your little heart desires. It doesn't matter. I hope in California, of course, it's me. But if it's not, everybody has their personal preference, so don't be shy of thing, and don't feel obligated to just be with one person, because at the end of the day, it is your hard-earned money that is going to have to be forked over. You don't want to go ahead and be in that position where you're just like, God, I wish I could have, would have type of thing, right? Should have shopped around for this person. I should have went to this person, and oh my God, this person is a complete headache. So after we go ahead and establish all of that, now, what are turn times, okay? So turn times, typically how long does a mortgage usually take? Now, a mortgage from start to finish, from originating loan, when we get into contract, that's when we have a fully executed RPA, which is a residential purchase agreement, when an offer is accepted. This is only going to be on a purchase, okay? On a purchase, it should take typically, if appraisal goes really, really well, it shouldn't take any more than 2 weeks for a loan to go ahead and go from start to finish. That's how long it should typically take. That means that we're going to go ahead and go from the very, very beginning. So the very, very beginning is going to be the fully executed residential purchase agreement is going to go ahead and come to us. As soon as that comes in, we go ahead and give out all the disclosures, the loan estimate, the ITP. ITP is intent to proceed. That takes 3 days. We have up to 3 days to go ahead and have that signed. You want to go ahead and do that really, really quickly, because you don't want to wait, because we are in contract. Once we have that ITP, then we get to go ahead and order the appraisals. Then we'll go ahead and send out our appraisal. Whether you get a waiver on our end, if there's a credit that we have to do, or you're going to have to pay for it out of pocket. That's going to be a cost that you're going to have to go ahead and take on. Then after you go ahead and do that, we wait for the appraisal. We should have, as mortgage brokers, as a lender, as anybody, should have already run something that's called AUS, which is the automated underwriting system. After we do that, we should have already pre-underwritten the whole entire file, so we know every last little answer. So we know that the underwriter, when they first look at it, the story that we're giving them, because your whole entire application, think of your whole entire application as a story. This story makes sense. If I look at it and I see a big deposit, and if I see something that is out of the ordinary, I already anticipated that, and then I go ahead and put in what's called a letter of explanation explaining that. So when he looks at it, he's not like, oh my God, what's this for? Because then the first turn time for an underwriter to take a look at it is going to be 24 hours. The second one, if we don't have a good application in, could typically take 72 hours. And then the longer the more information is required, the more that we have to go ahead and do, then the longer that it goes ahead and takes. Then as mortgage brokers, depends if we're processing it ourselves. Majority of big banks, they have a processing team that goes ahead and deals with it. I have my processing team, I could go and throw a stone at them if I wanted to. It's just, I could ask them right then and there. Processing teams and credit unions and banks and other big companies are a little bit further away. They're in different corporate buildings and this and that, so it takes a little bit shooting emails. But as far as brokers go, you know, we could kind of just say, you know what, forget the processing, you guys are taking too long. We could go ahead and take the reins on everything and do everything from start to finish, which means that we go ahead and get your homeowners insurance all dialed in. When I mean homeowners insurance is going to have to go ahead and have the information, the new lender, to go ahead and caddy into what who we're selling it to. So whether you're selling, if we got a better rate with whatever wholesaler that we're trying to sell the loan to, you know, that's the information that we have to go ahead and put. Then we have to go ahead and order your verification of employment, your verification of mortgage, your verification of rent, whatever verifications that we have to do. We could go ahead and take the reins on it, and we could go ahead and make sure that we process it so it's really, really quick. So if we go ahead and do everything that we're supposed to do, if we get that first touch on the underwriting portion of it, and all we're going to go ahead and wait is appraisal, that means that we could get an approval within 24 hours. Once we have all the other documents, we could potentially get that in the next 2 to 3 days. That means that we have a total of 4 days from beginning until clear to close. So if we get a clear to close within 4 days, that means we could go ahead and assign a closing date. Then we go ahead and call the title and escrow company. Now this is somebody you could shop for, or we could go ahead and use the one that we typically use. Then we go ahead and schedule your closing date. And this does not mean that you're going to go ahead and get the keys, and does not mean that if you're refinancing that this is the day that it's going to go ahead and refinance. If you're doing a cash out, does not mean that you are going to go ahead and get the cash on this day. This means that depending on where you're at, every state is a little bit different, but it means that we need wet signatures on the loan application, on your closing disclosures, on your closing docs. So we'll go ahead and send a notary out to your house, and then once we send the notary out to your house, then you go ahead, or wherever you choose to, you sign it. Then once we have that wet signature, then we have 4 days till funding. Now the funding will only happen on Monday through Friday. It will not happen on weekends. So if we do it on a Monday, you will get that funding on that Thursday. If we do it on a Thursday, that means that we're gonna have Thursday, Friday, skip Saturday, Sunday, Monday, Tuesday, Wednesday, somewhere around there, we'll go ahead and get the funding. So typically it shouldn't take, if we did our job right, if everything was done really correctly, it shouldn't take no more than a couple of weeks. We typically give a buffer of 30 days. Some very extraordinary loans, like if you're doing a debt service covered ratio loan, or you're doing like a foreign national product or a bank statement loan, or whatever these other loans are, they might sometimes take a little longer. But if you have a mortgage broker that's been in the business like myself for 22 years, you know, I've been in for a really long time, or you have a bank, a loan officer at a bank that knows what they're doing, and they could go ahead and make sure you're good to go. Credit union, same way, then you'll be all right. Well, hopefully this helped you out a little bit on who is better, bank, credit union, a broker. Obviously, I'm going to go back to being completely biased and saying that I am without a doubt the best, but that's all relative, right? Everybody chooses what they want, what you're comfortable with. And for up to 50% commission rebate on your next home purchase, because we are also on the real estate side, and for 0% listing fee on selling your home, or for any mortgaging inquiries, link in the description below. We'll be more than happy to help you out, look at your scenario, and see what we could go ahead and price you out. Thank you for watching. Until next video, guys.